Hello and welcome back to Piper Academy, where we dive into all the exciting projects of the crypto world. I'm Crux of Crypto, your navigator through the turbulent markets of blockchain innovation. Today, we're diving into the titan of a digital currency, Bitcoin. But the main question is, how does this trailblazer stack up on the rigorous Crux's curriculum grading rubric here on Piper Academy? Does it ace our test, or is there still room for improvement? Well, let's unravel the mystery of Bitcoin, which is the currency that started it all. Imagine a world where money flows freely without borders or banks. Enter Bitcoin, the first cryptocurrency, a digital asset that revolutionized finance with its decentralized nature that has been challenging traditional monetary systems. But what's beneath its digital surface? Let's delve into our rigorous 5.0 GPA scale and see how Bitcoin measures up against all the other currencies that have already evolved from it. Bitcoin was born from a vision of decentralized finance, a system where you control your money without intermediaries. It is a digital answer to traditional currencies, aiming to provide a global, accessible monetary system. Bitcoin's white paper, which I've linked below, states Bitcoin is purely a peer-to-peer version of electronic cash, which allows online payments to be sent directly from one party to another without a financial institution. Bitcoin offers efficiency over traditional banks by enabling fast, borderless transactions without the need for a third party, which reduces processing times and costs. Users have direct control over their assets, avoiding the trust required and fees associated with the banking institutions. Additionally, Bitcoin operates 24/7, contrasting with banks' limited hours, providing users with continuous access to their funds and the ability to transact anytime from anywhere in the world. Satoshi Nakamoto is the anonymous creator of Bitcoin who could be a single person or an entity of people. The vision Satoshi set out to conquer has its shortcomings we will talk about later. However, he has proven to be successful in creating an instrument that allows people to transact amongst each other. With this peer-to-peer cash system successfully created, I give Bitcoin a 5 out of 5 for vision. The peer-to-peer vision Satoshi set out for evolved to be more beneficial as a store of value than a medium of exchange. This is primarily due to the transactions taking a couple of minutes to over a day to process and settle, while fees can cost many dollars per transaction. This is not efficient, as there are many other cryptocurrencies that can process and settle for pennies within minutes. It is better to think of Bitcoin as digital gold, where you can hold for long periods and increase your fiat valuation over time. How can a store of value be so volatile? That is a great question. It is all relative to its history. Currently, it is not common to see Bitcoin go down over 60% or up over 300% in a 4-year period. Why 4 years? I will talk about this later in the tokenomics and price history sections, but it is important to note that it is proven to go up in price over time and is currently around its all-time high valuation. Being the store of value that it is and providing shelter from holding fiat currencies like the US dollar that are losing 2% every year due to inflation, Bitcoin gets a 5 out of 5 for use case. All global currencies are facing inflation, and this universal hedge allows everyone to protect their purchasing power. Great job, Satoshi. With Satoshi releasing stewardship of the blockchain, today, a decentralized network of developers, also known as maintainers, allow it to continue to evolve. Bitcoin requires upkeep to maintain the principle of decentralization that Bitcoin champions. Bitcoin Core is an essential free and open source software that acts as a Bitcoin node and provides a fully verifying Bitcoin wallet, known as a reference implementation of Bitcoin. Initially released by Satoshi as Bitcoin and later renamed as Bitcoin Core, it plays a crucial role in the blockchain network by validating the entire blockchain. The software, which requires downloading a blockchain over 235 gigabytes in size, includes a unique scripting language for defining the transactions. Leadership has transitioned over the years with significant contributions from the community and financial support from various companies and industry groups, including a notable donation from MIT in 2019 to support Bitcoin Core development. Satoshi passed on the Bitcoin reins to Gavin Anderson, who then expanded the team of contributors, known as the Bitcoin Core developers, to evolve Bitcoin Core. Control of Bitcoin.org, which is an open source website designed to foster growth for Bitcoin, has also shifted within the community. In 2014, Anderson stepped down as a lead maintainer in Bitcoin. After endorsing Dr. Craig Wright as Satoshi, Gavin Anderson was locked out of the Bitcoin repository in May of 2016, which he regrets doing and stated it was a mistake to trust Craig Wright. The repository moved from SourceForge to GitHub, with the copyright changing to Bitcoin Core developers, a transition that happened without monetary exchange or explicit consent from Satoshi from this ownership shift. After Anderson, Vladimir van der Laan took the helm of Bitcoin's development for 9 years, surpassing even Satoshi's tenure. He managed bug fixes, code reviews, upgrades, and dispute resolutions. However, since January 2021, van der Laan has been scaling back his involvement. His step back marks the third maintainer departure in 18 months, following Samuel Dobson and Jonas Schnelly. Following van der Laan's step back, Bitcoin's development is now led by 5 individuals: Hennady Stepanov, Michael Ford, Andrew Chow, Marco Falk, and Gloria Zhao. Each maintainer oversees different aspects, such as the graphical user interface, oversight of the build system, writing and reviewing code that governs the transactions in the validation process, crypto wallet programming, and testing measures. Their collective efforts ensure Bitcoin's software is updated, compatible with operating systems, and can handle transaction volumes, playing a crucial role in Bitcoin's value and its future. However, with many notable Bitcoin Core maintainers stepping away, to include the individual Satoshi chose to lead the project, I give the team a 3.75 out of 5. 3 maintainers leaving in an 18-month period, bringing the team from 8 individuals to 5, is a red flag to me. But it's important to note that Bitcoin doesn't require as much development as other blockchains due to its simple in nature use case. It was clear early on that Satoshi was not in agreement with how Bitcoin was being used and decided to step away in 2010. During the beta stages, he warned that the attention from platforms like WikiLeaks could prevent the currency from being adopted. In 2019, Dr. Wright explained his decision in 2010 to distance himself from the pseudonym Satoshi Nakamoto and Bitcoin. Apart from WikiLeaks, he cited the emergence of early Bitcoin users engaging in the funding of terrorism and the creation of darknet markets like Silk Road and Hydra as a significant factor in this decision. The Bitcoin Foundation, established in September of 2012, aimed to rehabilitate Bitcoin's image post-scandal and boost its adoption while being funded by grants from companies relying on Bitcoin's technology. Early on, Gavin Anderson joined as a chief scientist. Legal challenges emerged, such as a 2013 cease and desist order from California's financial regulators. High-profile legal issues continued, with Vice Chairman Charlie Shrem arrested in 2014 for links to the Silk Road marketplace, and Mark Karpels, CEO of Mt. Gox, resigning after the exchange's collapse. The foundation engaged in lobbying for Bitcoin-friendly regulation in the United States, though some criticize its political involvement. The foundation changed leadership many times due to legal issues, and in 2015, financial instability led to staff cuts and calls for the foundation's dissolution. Despite these challenges, the Bitcoin Foundation remains active, continuing its mission amidst a landscape of internal and external pressures. The Bitcoin community often disowns any other cryptocurrencies, also known as altcoins. Ethereum, Cardano, and many other projects quickly gained traction as an alternative to Bitcoin, but much of the Bitcoin community became maximalist, which means only Bitcoin has value in terms of comparing to other cryptos. The community continues to use applications and websites to communicate and develop. Open forums continue to host online discussions, and many real-world conferences, such as the Bitcoin Conference, which is the largest and most prestigious gathering of the Bitcoin industry. This year, it is set to take place in Nashville, Tennessee from July 25th to the 27th. For me, crypto is crypto, and Bitcoin should not be kept separate at this point. If you don't believe the broad community accepts other projects, set up a booth for Ethereum at Bitcoin Tennessee and tell me how that goes for you. Our mission should be to work together to pass regulation, not just push one project as its own entity. With the hardships of the early stages and being able to foster growth, I give the community a 4 out of 5. Bitcoin's roadmap is methodical and planned out, focusing on gradual enhancements rather than radical changes. With the recent exchange-traded funds being approved earlier this year, Bitcoin has found its footing in terms of being broadly accepted. The Bitcoin halving event occurs every 4 years, which is the next major event in terms of changing the landscape. Bitcoin's roadmap has been focused on improving scalability, privacy, and functionality while maintaining its decentralized nature. In the past, significant updates like segregated witness, also known as SegWit, were introduced, which increased the block capacity and improved transaction malleability issues, paving the way for further innovation like the Lightning Network, enhancing Bitcoin's scalability by enabling off-chain transactions. Another major milestone was the implementation of Taproot in November 2021, the single most significant upgrade since SegWit. Taproot introduced Schnorr signatures, enhancing privacy, efficiency, and smart contract capabilities, allowing for more complex conditions for transactions while keeping them indistinguishable from regular transactions. Looking ahead, Bitcoin's future roadmap includes further enhancements to scalability and privacy. Potential developments include improvements to the Lightning Network, more adoption of second layer solutions for faster and cheaper transactions, and additional privacy features to strengthen user anonymity. However, Bitcoin's decentralized and conservative nature means that any other major issues undergoes rigorous community scrutiny and testing before implementation, ensuring the stability and security while evolving the protocol to meet the growing demands and new challenges. With Bitcoin's subtle but required updates, I give the roadmap a 5 out of 5 as the community is very cautious with what is allowed to change within this ecosystem. Hash rate is crucial for Bitcoin miners as it undermines their success in the competitive mining process. A higher hash rate signifies greater computational power, increasing the probability of solving puzzles required to validate transactions and secure blocks, thereby earning mining rewards. As the network hash rate climbs, the difficulty of the mining puzzles also increases, which requires continual hardware upgrades to stay competitive. This competition not only fosters hardware innovation, but also fortifies the network security, making it harder for attackers to compromise the system. A robust hash rate signals a healthy and secure network. The ghash.io mining pool briefly exceeded 51% of Bitcoin's hash rate in 2014, sparking fears of a possible 51% attack, where the pool could theoretically double spend Bitcoin. This situation led to a significant discussion within the Bitcoin community about countering such threats. The incident attracted widespread media attention and was followed by a DDoS attack on ghash.io in 2015, even after Ghash vowed to not attack the network. Between China and the United States, 60% of the hash rate is shared between these two countries. As I dove deeper into the mining pools that control this hash rate, two in particular raised red flags. Foundry USA controls 34% of hash rate, followed by Antpool, which is quartered in Beijing, China at 20%. Theoretically, this is enough hash power between these two mining pools to change Bitcoin forever. The largest mining entity, Foundry USA, builds their own mining equipment, has an academy on how to mine, shipment and storage solutions, and mining equipment installation services. To put this in perspective, Foundry accounted for 15% of the hash rate in 2021, 20% in 2022, 29% in 2023, and now 34% in 2024. At this pace of 6% annual growth, Foundry USA will control over 51% of the Bitcoin hash rate by the Bitcoin halving in 2028. Yes, you heard that right. Nobody's talking about this and it is all open source. If you don't believe me, I linked my sources in the descriptions below. This is the modern day space race, and it is between the United States and China. One day, we may have to choose to swap our hash power to put into one of these two pools to keep the other pool from controlling too much hash power. That is how dominant these two mining pools are. As of this year, Antpool has slowly been narrowing the gap, but once the halving occurs in April, keep a close eye on these two mining pools and see how this reacts. As for grading these two metrics, Bitcoin gets a 5 out of 5 for security and a 2.5 out of 5 for decentralization. Hash power is a metric that you can put your money and resources into to achieve an advantage, and the Bitcoin community is going to have to eventually revisit the conversation they had back in 2014 about preventing 51% attacks. Scalability remains a hurdle for Bitcoin, with this network sometimes struggling to handle high transaction volumes efficiently. Innovations like the Lightning Network seek to address this, offering faster transaction times off the main blockchain. A Bitcoin transaction generally needs 6 confirmations from miners before it is processed. The average time it takes to mine a block is 10 minutes, so you would expect a transaction to take around an hour on average depending on how congested the network is. Even with the upgrades mentioned earlier like SegWit, Bitcoin still faces challenges in scaling to accommodate global payment system levels. The ongoing development and adoption of second layer solutions and protocol upgrades continue to address these scalability issues, but whether Bitcoin can achieve the scalability required for widespread global use remains an open question. With Bitcoin only being able to handle 7 transactions per second, the scalability issue seems to be another lingering problem. I give scalability a 3.5 out of 5, as Bitcoin has changed from a peer to peer network to a store of value due to this complication. While not the most technologically advanced, Bitcoin's innovation lies in its creation of a decentralized digital currency, inspiring a plethora of subsequent blockchain projects. Bitcoin is responsible for all the altcoins we see today and paved the way for adoption. Though the current technology of other projects has surpassed the limits of Satoshi's vision, Bitcoin is single handedly responsible for the adoption of other digital currencies, and that alone is enough for me to give it a 5 out of 5. Great job, Satoshi. Bitcoin's cap supply of 21 million coins is a key feature of its tokenomics, creating scarcity and deflationary pressure. Its halving events, as mentioned earlier, reduced miner rewards, are pivotal moments that have historically impacted its price. The Bitcoin halving is an event that halves the reward miners receive for adding new blocks to the blockchain, occurring approximately every 4 years. If the halving reduces the block reward, it can also lead to reduced profitability for miners unless the price of Bitcoin increases correspondingly. This adjustment does not directly affect the computational power required to mine Bitcoin, as that is directed by the network's mining difficulty, a mechanism independent of the halving, adjusted roughly every 2 weeks to maintain a consistent block time regardless of the total computational power. With these basic tokenomics, I give Bitcoin a 5 out of 5. It is simple in nature, but Satoshi clearly knew about Moore's law, which states the number of transistors on a microchip doubles approximately every 2 years, while the cost of computers is halved, suggesting rapid technological advancement and increased computing power over time. In the context of Bitcoin, Moore's law implies that as computational power increases, mining hardware becomes more efficient and powerful, potentially making Bitcoin mining more competitive and decentralized. However, as mining devices improve, the Bitcoin network adjusts the mining difficulty accordingly, maintaining a consistent rate of block creation and network security, regardless of the advancements in hardware technology. Overall, I give Bitcoin a 4.38 out of 5. I am always fully transparent and have been accumulating Bitcoin in my portfolio since 2020. Now I'll go over the price history and where I think Bitcoin will top out this cycle. From mere cents to $70,000 in 15 years, Bitcoin's price history is a roller coaster of volatility. Bitcoin has an interesting 4-phase design, which lasts about a year in each phase, which are known as market cycles. Phase 1 is accumulation, phase 2 is markup, phase 3 is distribution, and phase 4 is the markdown. During the accumulation phase, sentiment is uncertain with low volume and volatility, attracting long-term buyers. The markup phase, also known as the bull market, features rising prices, increased trading volume, and optimistic sentiment, drawing in new participants. The distribution phase sees the equilibrium between the buyers and the sellers, leading to price stabilization and mixed sentiments of greed and fear. Finally, the markdown phase, also known as a bear market, is driven by fear, resulting in a downtrend with high volume and negative outlook. Each phase plays a crucial role in the cyclic nature of the markets, setting the stage for the next cycle to begin. We are currently entering the markup phase, which is projected to go as long as Q4 2025 by many analysts. This outlook derives from the 2013, 2017, and 2021 bull market peaks, all being in quarter 4 of the year preceding Bitcoin's halving event. Bitcoin gained over 1100x in the 2013 bull run, 113x in 2017, 23x in 2021, and with these diminishing returns, I personally believe Bitcoin will get over $200,000 around November of next year. Remember, this is not financial advice, and always do your own research when investing your hard-earned money. Let me know your thoughts on what price Bitcoin will top out and when. Each Saturday, we host an X Space with a Q&A if you have questions on this project or want to discuss what I've mentioned in this video. Join one of the fastest growing Discord communities as I publish all this information in our server so you can compare Bitcoin with the other projects that I've already evaluated. If you are fascinated by Bitcoin's journey and want to stay on top of the crypto world, then don't forget to subscribe, hit that bell icon, and get your weekly dose of Crux's curriculum as we continue to dive deep into the crypto universe. That's it for today's deep dive into Bitcoin. Keep questioning, keep exploring, and most importantly, keep learning because knowledge is profit. Remember, keep Crux's curriculum close because chaos can come calling. This is Crux from Piper Academy signing off. Catch you on the next episode.